Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, let's begin with a stock that's been under pressure. Violeta Todorova from Leverage Shares unpacks the technicals for the real estate platform group REA. It's a stock that has been trading in a downtrend for almost a year, but one which Violeta says is ready to break out.
However, I'm seeing the first signs of the downward momentum deteriorating. If you look at that chart, there is a very large bullish divergence between the price and the RSI indicator, which suggests that REA is most probably at an inflection point. So I'm keeping a very close eye on key support of $147.57. In my view, there is very strong probability that support will hold, and we will see the price rebounding to around $181. But I think by the end of the year, we have a very good probability of that level of resistance being cleared, giving us initial upside price target of 210 points. So I see the current price weakness providing excellent buying opportunity for investors. So for me, this is a very strong buy at the moment.
Turning now to energy with a focus on uranium, and Paladin is one of Violeta Todorova's favourite stocks given its uptrend, even though that has moderated recently.
And Paladin has been trading in a wide range between roughly $10 and $14.44. The current price weakness and the proximity to key support, which is a multiple support level, once we have a previous support, which is likely to hold, but also that level coincides with the long-term uptrend line of Paladin, which gives us an indication that support is likely to hold. The RSI indicator remains constructive, firmly in the bullish range. So I think current price levels present good buying opportunity. On the upside, in the next 3 to 6 months, I expect Paladin to revisit its key resistance of $14.44, but that level, once uranium prices start recovering, which most probably we will see sometime in 2026, I'm expecting to see that resistance being cleared and giving us a price target of $17.
And finally, a look at the retail space with a focus on the home furnishings retailer ADH. Gary Glover from Novus Capital says the share price hasn't done well over the past 12 months, which reflects the headwinds facing the sector as cost of living pressures increase along with interest rates.
A lot of pressure on the retailer segment there, but we've had some massive corrections there. So from ADH and Harvey Norman, most of the retailers have come back here. So ADH is on around about 6 or 7 times here. The yield's around 7.5% plus. So, if the businesses sort of, can just sort of hold steady here the next 12 months there, definitely some value here. I do feel like it may need a catalyst. So I think if there is a Middle East sort of peace deal here, those sort of probably, apart from the sort of travel stocks, I do think the retailers are the other big one there, because that oil price really does affect discretionary spend. And so if there's a relief in that oil price, then I think that, these retailers are now sort of trading on such low multiples. If we look at them historically, they're trading on the low side there. They just might need a catalyst to get going here. So there's definite value here. Just need maybe a sort of catalyst to give them the kick there. But definitely a sector to be watching here. I think that's a sector to jump on if we get something sort of shifting sort of, in the Middle East. If that gets sort of concrete deal, then I think that's a sector which could really jump here.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.